most likely happen globally.
Good morning, you're watching DayBreak, Bloomberg Quint Live and India's first digital live streaming business news service. I am Agam Akil and here are the top headlines. Asian markets falter at opening after Wall Street ends on a mixed note. And the US Federal Reserve sticks to its December rate hike even as its Federal Open Market Committee members voice their concerns over inflation remaining well below the targeted 2%. And the cabinet moves an ordinance to bar willful defaulters from buying stressed assets, and the president's approval is awaited. And the government constitutes a 7-member task force headed by Arvind Modi to draft a new direct tax law. Heading into Thanksgiving, the score moving into straight up to the US markets. The Dow and the S&P fall, whereas the Nasdaq rises. And the Nasdaq Composite eked out a record close on Wednesday, led by gains in Amazon. Let's go across to Abigail Doolittle for more updates in the US markets.
Wednesday's Wall Street session finished in a bit of mixed fashion, with the Dow and the S&P 500 modestly lower. The tech-heavy Nasdaq, though, fractionally higher, putting in yet another record closing high. Now, before we take a look at some of the movers on the day, beneath that relatively calm surface, cross-asset class tells us that the stock moves might have been small, but overall there was a bit of a risk-off tone, considering that Haven bonds, the Japanese yen, and gold all rallied. The yen, in fact, having its best day since May. All of that tells us that some investors are seeking the safety, again, of those Haven assets. Now, relative to some of the bigger movers that stood out on the day, Apple and Amazon both up more than 1%. Amazon, of course, ahead of the start of the holiday shopping season, Black Friday and Cyber Monday. We also had the likes of department stores, Macy's and JCPenney's up more than 1% ahead of that holiday shopping season starting. Lots of good cheer there. GameStop, those shares soared on the day after the company put up a very strong quarter, driven by Activision Blizzard's Call of Duty game. So again, there were some bright spots certainly on the session, but tying in the rally that we saw for bonds, the yen, and gold with the mixed action for stocks, Wednesday's Wall Street session had a bit more of a risk-off tone. In New York, Abigail Doolittle, Bloomberg News.
And Federal Reserve officials meeting earlier this month saw an interest rate increase in near term, even as divisions persisted over the policy with path forward amid tepid inflation. We're joined by Bloomberg's Kathleen Hayes to talk more about how concerns about inflation have panned out.
This theme has developed. This concern over weak inflation has grown, in part because inflation was actually higher at the beginning of 2017 than it is now. And as it's weakened, as it's fallen, for example, Janet Yellen, who has been so certain inflation will rise because unemployment is so low, in a speech just 24 hours ago, we were talking about it, is talking about the dangers of low inflation. It may be transitory, but now the Fed isn't so sure. The November minutes are very interesting because it's pretty clear, many Fed officials looking for a December rate hike. Look at hashtag B 6987, though, because it's this division over inflation that also comes through very clearly. Red line, inflation target, 2%. White line, headline inflation, 1.6%. Then you've got the key measure, the core inflation, PCE deflator, 1.3%. That is very far from 2, if you ask me. Now, let's go back to some of the specifics that we got out of the minutes. And it has a lot to do with the words the Fed uses. Many, that's more than half. That's a strong consensus, are ready to hike the key rate near term. But again, this division over inflation puts the March rate hike in question and the pace of rate hikes next year. And we saw that discussion as well. A few, that's not even half, but it's probably a few significant doves, said inflation has got to actually be rising on a sustainable path towards inflation before they will vote for rate hikes. And they say the Fed is going to have to monitor inflation developments closely, this data-dependent Fed. But let's also be clear. They talked about tax reform possibly boosting growth. They are worried about the formation of an asset bubble. And overall, there's a lot of consensus on this economy doing better. But there's deepening concern over inflation, which is not playing along.
All right, so let's shift focus to the Indian markets. We have Darshan Mehta here with us to take us through all that has happened yesterday and perhaps what can be expected in today's day of trade. Darshan?
Good morning, Agam. What we're seeing right now is a decent opening as far as the SGX Nifty is concerned. It's trading up almost 10 points. Global cues are doing well, so overall the cues don't seem to be bad. So the SGX Nifty is indicating a gap up of almost 12 points. But remember, we are up almost for the fifth. We've been up for 5 continuous days. So the trend seems to be on the positive side. Most of the ADRs, were mixed. So Dr. Reddy ended down almost close to 2.5% lower. You had Wipro was down 1%. Vedanta was down almost 0.8%. What gained was HDFC Bank and Infosys. They gained, so mixed cues coming in from the ADR basket. Crude as a pack is doing extremely well. Crude gained almost 2% in overnight trade. There is a significant amount of traction both on the Brent and WTI. The WTI hits almost the $58 barrel per mark, while Brent hits almost 63, so it's back about the $63 barrel per mark. As far as commodities are concerned, base metals ended mixed on the LME, because if you're looking at some of the base metals that came out, aluminium, zinc gained almost 1%, copper and tin were up almost 0.6%. What didn't do well was nickel, which was down in trade, and lead was down in trade by over 0.5%. As far as the other commodities are concerned, COMEX copper is currently trading with a negative bias, but positive opening by the commodities in China. So be it some of the commodities like rubber is up almost 3%, aluminium is gaining 1.5%, steel is gaining up close to 1%, even copper is trading with a positive bias in China. So overall, the commodity cues coming in from China are doing well. Gold is trading muted in morning trade, but this comes on the back of 2 days of good gains that came in the yellow metal. So almost that's the big trend that's happening. FI sold in almost 440 crores in the cash market yesterday. This is the NSE provisional data, and DI has bought in almost 837 crores in the cash market. Overall, on a month-to-date basis, FIs have bought in almost 15,300 crores, while DIs have bought in anywhere almost 7,000 crores, so almost $3 billion of net buying in equities by in the equity market, in the cash market. Nifty's gained for the 5th straight session. The trend seems to be positive, but no major moves are coming in on the Nifty. The Nifty Media Index was up 2.6%, mainly led by Z Entertainment. The PSU Bank Index did well, it was up over 1%. What happened as far as the other sectors are concerned? Pharma and metal sectors dropped in trade, so that was the weak trend that was happening. The Nifty was up almost 15 points. What contributed? HDFC, ITC, HDFC Bank and SBI. So basically, some of the banking names contributed. Some of the private banks didn't. So IndusInd Bank, Axis Bank looked rather weak. And IT as a pack, Tech Mahindra seems to be showing some bit of negative traction. The Nifty was up almost 15 points.
But Darshan, so we are clearly expecting some amount of consolidation. What's going on in the derivative space?
See, 10,400 is where majority of the positions are taken on either side. So if you're looking at the Nifty, the premium is currently almost 15 points. There was a shedding of open interest, so short covering was seen in the markets yesterday. Overall, if you're looking at the PCR as well, this is the Nifty Bank. The Nifty Bank was flat in trade, but the open interest was down by almost 2% in trade. As far as the VIX is concerned, VIX has been moving up, so almost 14 now. It was up almost 2.3%. So that was the same as far as the VIX is concerned. Not too much changes on the PCR. It's moved up from 1.30 to 1.32 on the Nifty. For the Bank Nifty, it's still below the 1 level mark. Now this is where the open interest change did happen. Majority, as I spoke, in and around the 10,400 mark. Some bit of put writers writing in at the 10,100 mark because they don't expect the market to move down significantly. But everything is mainly concentrated around the 10,400 mark in trade. These are the two stocks that come out of the F&O ban, Kaveri Seeds as well as I'm sorry, both of them are Kaveri Seeds. So Kaveri Seeds comes out of the F&O ban. Sun TV was the one counter which was doing extremely well in trade. Open interest build-up was up almost 3% on open interest build-up of 13%. And Bata India saw fresh shorts in trade yesterday. Open interest build-up was 18%. Yesterday there was expectations that some bit of package will come in on the leather sector, on the cabinet. That didn't happen, and there was fresh short positions that was seen in Bata in trade yesterday. But Agam, that's the general cues that we get.
Yes, it certainly did turn around for Bata later on in the trade in the day. But thanks for that, Darshan. We'll be watching out for more cues from there. But we'll move on. And the cabinet approved bringing in an ordinance to amend the insolvency and bankruptcy code and prevent misuse of provision. Nikunj Oiri filed this report on the changes that are likely to be introduced in India's bankruptcy regime. Listen in.
The government has promulgated an ordinance to make changes in the insolvency and bankruptcy code. The changes, according to a government official, is that willful defaulters or those found guilty of siphoning of funds or found guilty of any fraud will not be allowed to bid in the process. The ordinance also gives powers to the committee of creditors to consider the viability of the resolution plan that has been approved by the resolution professional. According to the same official, promoters will not be barred from the bidding process because the government feels that promoters who would want to regain control will place higher bids, and this will lead to better recoveries.
But Kumar Saurabh Singh, partner at Khaitan, says he doesn't see this changing the regime in any big way. He believes that this has brought the rule book based approach. Let's hear him out as well.
I don't see incrementally this changing the whole regime in a very big way, but you see a more rule-based approach so now you have code prescribing that you can't consider anyone who is a willful defaulter instead of the decision being left to the committee of creditors. So I think it is a rule book based approach rather than leaving it to the discretion of the lenders.
So the government has set up a 7-member panel to draft a new direct tax law. Top Revenue Department bureaucrat Arbind Modi, who has helped draft the direct tax code 8 years ago, has been handed the role of the convener of the panel. And among the other members are Chartered Accountant Girish Ahuja, Chairman of E&Y Rajiv Memani, lawyer Mukesh Patel, consultant at iCryer Mansi Kedi, and retired IRS member and lawyer GC Srivastava. Chief Economic Advisor Arvind Subramaniam will be a permanent special invitee in the task force, and the committee is tasked with drafting a law keeping in mind the prevalent tax systems in other countries. International best practices and economic needs of India, the task force will submit its report to government within 6 months. We spoke to GC Srivastava, a member of the 7-member task force, to understand the objectives of the committee and if there are any needs that need radical change in the tax regime.
The constitution of the task force defines certain terms of reference. Of course, one is the considering the changes across the world that have taken place over the years in cross-border taxation and direct tax laws, two economic needs of the country, and third term of reference, has been left to the committee to decide. Now, the point at issue is that one of the keen objects of the government has been to provide a simple legislation and to reduce the areas of dispute and litigation. Changes are really required at a very broad level, not only at broad level, but at every stage and every aspect of the taxation. Some need to be changed to suit the times. Some alignment is needed with the international best practices. Some further simplification is required to help the common man understand the tax laws in a better and comprehensible manner. I mean, all these are general thoughts, but too early to make any specific comment on how the committee would like to proceed.
Okay, let's take a check on the rupee and the bond. Saloni Dhanuka joins us on the show. Saloni, the rupee is at 64.92 as of now. What do you have for us?
So Absolutely, Agam. Yesterday, the rupee ended marginally lower and erased all the gains by closing marginally lower at 64.93 levels against the dollar. Now, remember that the home currency touched a 2-week high of 64.70 levels per dollar intraday on the back of strong rally in the local equity market. However, concerns about the rising crude oil prices largely pressurized the rupee. Asian currencies were trading higher as dollar weakened after US Fed Chair Janet Yellen warned against raising US interest rates too quickly. Also, the dollar yesterday slipped almost 0.8% against all of its G10 peers after the release of November Federal meeting minutes that expressed optimism about the economy. However, there were disagreements on the pace of inflation. Dollar index now trades steady in the early Asian trade at 93.20 levels. Coming back home, dollar rupee is trading at 64.77 levels against the dollar in the non-deliverable forward market, which indicates a strong opening for Indian rupee in today's trade. Moving on to bond market, the 10-year benchmark yield ended 6 basis points higher at 6.96%. And lastly, global funds increased their rupee debt holdings for the second consecutive session yesterday. They infused close to 1,360 crores according to NSDL data, Alex.
Thanks for that, Saloni. Let's shift focus to the commodity markets, and we have Jayesh Khilnani joining us to tell us all about it. Jayesh, over to you.
Morning, Agam. So let me start off with oil prices, which gained more than 2% overnight on the back of positive inventory data that came in from the US market. So the EIA reported that US inventories came lower by about approximately 2 million barrels for last week, and that's the reason we saw a 2% uptick on the WTI. Brent, however, gained just more than 1%, and currently in Asian morning hours, we are seeing some bit of softness come about for both variants of oil. Shifting focus to gold prices, which actually saw some traction come about, gained up almost to $12.95 for an ounce. Now, this is on the back of Fed minutes that were released yesterday, which showed that there is talk of lower inflation coming in for the US market, and that's the reason we saw an uptick in gold prices. What aided to the climb was also the dollar index, which closed negative for the second straight session overnight. However, we are seeing dollar index is currently trading with a positive bias. As far as the LME base metals were concerned, they too had a good session on the London Metal Exchange, which actually showed a gain of more than 4 days now. But remember that all these 4 days that the LME base metal index has climbed, it has been less than 1%. Zinc actually climbed more than 1% to close at a 2-week high on the back of inventory data. So we saw that zinc stockpiles or the inventory came in lower at about almost 1% to 222,000 tons, which was the lowest number that it clocked for itself since 2008. Lastly, on the Shanghai Metals Exchange, we are seeing some bit of positive bias for all the base metals, which are trading anywhere in the range of 0.5% to 1.5% positive for each of the base metals.
Well, thanks for that, Jayesh. We'll move on to the stock of the day. SIS India reported a stellar September quarter with a net profit jumping as much as 300%. Nikki Mirchandani is here to tell us all about the earnings. Nikki, over to you.
Hi, Agam. Security, intelligence and services, that's the stock that we're looking at, and a good set of numbers coming in from the company. If you look at the revenue, that's grown by as much as 36% on year-on-year basis in this quarter at 1,460 crore as compared to a figure of nearly 1,076 crore that we saw in the base quarter. Net profit for that matter, that's a multifold jump, almost a 4 to 5-fold jump there at 59 crore as compared to a figure of nearly 14 crore that we saw in September 2016. Well, EBITDA for that matter, healthy performance coming in on the operational front as well. We have seen a 50% jump there, and the number is at 74 crore as compared to a base quarter figure of nearly 49 crore. Margins have expanded. They stand at 5.1% as compared to nearly 4.6% seen in the September quarter of the previous year. So reaping the scale of benefits, the margins have expanded and also driven by higher EBITDA as well as the lower finance cost. That's why we've seen this multifold jump coming in on account of the profitability. If you look at the finance cost, that's almost come down by nearly 26% to a figure of 22 odd crores as compared to a figure of 17 crore that we saw in the corresponding quarter. Debt for that matter, that's come down to from 256 crore in FY17 to presently 91 crore in the second half of this financial year. Also, the share from losses, shares of losses from associates has also narrowed down for this company, which has augured well in terms of the bottom line performance. This share has narrowed to a loss of 2.5 crore in this quarter as compared to 4.6 crore in the corresponding quarter. Agam, just to give you a little background about what the company is, well, it's a private security provider and has a market capitalization of around 6,000 odd crore.
Well, thanks for that, Nikki. We will be watching out for how SIS India pans out in trade today. But we will move on to stocks and news. We have Shraddha Babla joining us to give us all the stocks which will be in focus. Shraddha.
Well, to start off with, Agam, promoter Thomas Cook will sell as much as 5.4% stake in Quest Corp. That is via an OFS which opens today. Now, the floor price for the OFS has been set at 800 rupees, which is a sharp 12.3% discount to yesterday's closing price of 913. Thomas Cook held almost a 57% stake in Quest Corp as of 30th September 2017. We also have Jaguar, which has said that they will recall 7,000 sedans and SUVs with faulty electronics. So we could possibly see a marginal negative reaction coming in on Tata Motors. You also have an ET report which says that Japan's JFE Holdings may jointly bid with JSW Steel for assets of the insolvent Bhushan Steel. Now, they've said that under the plan, JFE would set up a separate SUV with two partners to manage the assets. Now, the bid, they say if successful, will help JSW Steel to expand its operations in the northern and eastern part of India without overstretching its balance sheet. So watch out for those names. You also have another ET report which says that Indigo may be looking beyond Air India and they may buy 50 wide-bodied aircrafts. Now, that's their plan B for overseas operations. And lastly, we are also tracking Garware Waldropes. Their earnings came out after market hours yesterday. Revenues fell 9%, but they saw a 9% higher EBITDA numbers. Margins also saw a bump up of about 340 basis points. Remember, the earlier quarter had, in the earlier quarter, GST had impacted the domestic fisheries business, and hence the net profit has grown about 8%. So we could see some positive reaction there.
Well, earnings keep trickling in. Well, thanks for that, Shraddha. We'll move on. State-run Steel Authority of India is looking for a turnaround this year. And the Steel Ministry will be calling for an expression of interest for its 3 major plants by the end of this year. That's the word coming in from Aruna Sharma, the Secretary at the Ministries. Let's hear out as to what she has to say on this matter.
Very soon there will be an EOI for Salem as well as for the Durgapur alloy plant and Vishveshwaraya plant. So let's see, wait and watch what kind of an interest it creates in the market. But definitely what we have made it very clear that in Salem we are only doing strategic disinvestment, that is 51%, so that better management comes there. And 49% will be retained by the sale, the land and everything ownership will continue with the sale. Only user factory rights will be available, whosoever take the 51%. EOI should be coming very soon in this calendar itself, and let's see how it generates a response. Then accordingly we will react.
And Somit Sarkar is standing by with the big brokerage calls of the day. Somit.
Good morning, Agam. Now, on the brokerages, first we have is Motilal Oswal on PC Jewelers. Now, they have initiated coverage on the stock with a buy rating and a target price of 490, which suggests a potential upside of 36%. Now, PC Jewelers has an enormous opportunity in the Indian jewellery market, led by the shift towards the organized player, and its large nation-based stores will be a leverage to this shift, according to Motilal Oswal. Now, though it does not have the first mover advantage, but in the last 10 years, it has emerged as the second largest jewellery retailer in India, and increasing store level sales and profitability and higher use of franchisee model to make the business asset light are the positives for the company, according to Motilal Oswal. Now, on the back of this, they are expecting the revenue, EBITDA and net profit to grow at a compounded annual growth rate of 21%, 24% and 30% over the next 3 years. Now, they are also expecting the company's return on capital employed to improve to 19.5% by financial year 2020 and return on equity to improve to 19% by financial year 20. Motilal Oswal also has a bull case target price of 550 rupees, where they're expecting the revenue and net profit to grow at a CAGR of 23% and 36% over FY17 to FY20. Second, we have is UBS on Aegis Logistics. Now, they have also initiated coverage on the stock with a buy rating and a target price of 280, which suggests a potential upside of 20%. Now, Aegis is a leading third-party LPG terminal operator in India and offers handling services for LPG imports. Now, company is expected to benefit from the surge in LPG demand and the growing dependence on the imported LNG. Upcoming new terminals, weak competition in this market, and the new LPG pipelines which are being developed by the oil marketing companies are the positives for the company. Now, the company is currently well positioned to handle the imported LPG with its LPG terminals at key ports. And on the back of this, the brokerage is expecting the company's market share in the imported LPG segment to increase to 28% by financial year 2021 from current 12% in financial year 2017. They are also expecting the company's EBITDA and net profit to grow at a compounded annual growth rate of 40% and 42% over FY17 to FY20. Third, we have a CLSA on Kansai Nerolac. Now, they have also initiated coverage with a buy rating and a target price of 600, which suggests a potential upside of 24%. Now, Kansai Nerolac is a leading paint firm in India with leadership in industrial and a 60% market share when it comes to auto. Now, high leverage to capital expenditure revival in India is expected to augur well for the company at this point of time. Now, though input prices are rising, margins will be sustained for Kansai Nerolac on the back of price hikes, improvement in revenue mix and operating leverage. Now the brokerage is expecting the company's revenue to grow at a CAGR of 16% over FY17 to FY19, primarily led by volumes, and EPS to grow at a compounded annual growth rate of 17% over FY18 to FY20. Now the current valuations of Kansai are very high, but the brokerage is saying that these high valuations have to be seen with the long-term opportunity, strong balance sheet and high governance level that Kansai brings in.
Well, thanks for that, Somit. We'll move on. The US military has released a video of a North Korean defector who made a dash for freedom in a vehicle and on foot. He was shot 5 times as he limped across the border into South Korea. Take a look. But there is a lot to talk about over the course of the day, and you'll find all the live market action on Bloomberg Quint. There are also a few stories that you should consider reading on the website bloombergquint.com. Here they are. JUD Chief Hafiz Saeed will soon walk free after a Pakistani judicial body ordered his release from house arrest yesterday. In a setback to India's efforts to bring justice to the perpetrators of the 2008 Mumbai terror attack, India's corporate debt in the last 3 months has also ended through September, and the ability of the companies to pay interest on loans improved slightly. The Indian company's debt stood at around 13.9 lakh crores at the end of September, compared to rupees 14.3 lakh crores in the previous quarter. Now, that is according to a Credit Suisse Corporate Health Tracker report. Well, with that, it's a wrap on this edition of Daybreak. All you need to know is up next. Stay tuned into Bloomberg Quint.